Welcome to the Straits Financial News Recap, your update on the latest market trends and developments. Markets previously focused on tariffs are now increasingly attentive to fiscal policy as the key issue. The U.S. government's pivot toward expansionary spending may support risk assets in the short term, though longer-term structural risks remain. Volatility remains likely as the market digests both the near-term stimulus and structural concerns. The Trump administration has clearly moved away from its earlier commitment to fiscal deficit reduction. The shift toward aggressive spending suggests that reducing public debt is no longer a priority. This policy U-turn has temporarily lifted market sentiment, though concerns over deficit growth persist. Rising deficits and potential inflationary risks down the line. Investors are now more concerned about how the U.S. will finance expanded government spending as Treasury issuance increases, and yields are beginning to shift, especially on the long end of the curve. The market's focus has moved away from tariff policy and toward the sustainability of government borrowing. Meanwhile, China's macroeconomic outlook will be shaped by the trajectory of fiscal easing, whether fiscal easing continues into the second quarter. If the government maintains its infrastructure stimulus and local government bond issuance, the economy could stabilize. But any premature tightening would risk slowing recovery and weakening market confidence. Given these shifts, risk assets could be influenced by short-term stimulus effects, especially equities and commodities. However, investors should remain alert to funding risks, rising yields, and long-term debt sustainability. Strategic positioning should strike a balance between near-term momentum and macroeconomic prudence. Follow Straits Financial Group on all our channels to stay ahead of the markets.